Hello everyone, welcome to our new webinar. It's March 3rd, so this will be the first Elliott Wave webinar for this month. Let me know if you can hear my voice. Can you see the screen, please? Someone is here, Hunting Traps is here, Alexandria is here. If we have some more visitors, please just let me know in the chat box if everything is fine. Team is here. Hey team, Anis is here. So is sound okay, or shall I increase the volume here? All good. Shah is here. We have someone from Zimbabwe as well. Interesting. Okay. Let me share my charts real quick. Okay, so as you know, we had a very interesting moves lately. It's never boring with Trump. As you know, on Friday we had this unbelievable show between Zelensky and Trump meeting on Friday when there was no mineral deal signed, but still markets were able to recover pretty nicely. So it looks like that we have some risk on sentiment that could continue in at least in the first few days of this week. As you know, a week before we had a very bearish close on Friday. This was what, 10 days back or so, and then we said that on Monday mostly we will see a continuation to the downside, and that has been the case. So we have seen a pretty deep retracement firstly on stocks last week, but now since we got this bounce on Friday, I think that we have some very interesting price action that suggests we could continue higher, at least in the short term. More importantly, on Sunday, yesterday, Trump announced that some cryptocurrencies will be included in US strategic reserves. And as you know, this everyone was waiting on this kind of new details. Whenever Trump will give us some more information on this, of course, market has seen between that pretty deep retracement. But now, when we have this news from Trump, it looks like that markets on cryptocurrencies could be back in uptrend. So now when we have stocks recovering since Friday, and now also this news from Trump yesterday, it looks like that this risk on moves could have a very interesting positive impact on cryptos as well. So not only this news itself, but the whole risk on cycle, maybe if really is here, will be very, very good and positive for cryptocurrencies. But as you know, we will get some more important data this week. Firstly, we had some strong European data today. Inflation was higher. That's why we are seeing a push to the upside on the euro. But later today, or maybe in less than 24 hours, we will get more details on tariffs for Canada, Mexico, and China. So this will be a very important driver, at least for the US dollar. Okay, so it looks like that this volatility will remain here, especially if we also consider that then we have the ECB and the US jobs data as well on Friday. So now if we firstly go and look at some cryptocurrency charts, because these were the most interesting movers. As you know, just let me check here. Okay, yeah, chart is now. I've been posting this chart on Twitter. I also recorded on video on Friday on cryptocurrencies for our members. I highlighted some very important metrics on-chain data, which showed that potentially we can be moving into some interesting levels, support levels on these dips. So here we are looking at unrealized loss, and it means that if this blue line is coming to the upside there, it means that more traders are in a loss. So if there are more and more traders in a loss, it means that possibly we are closer to a potential support, right? So on Friday I highlighted that this could be a very important region that definitely we can be moving into some very attractive and interesting support. And so far we have seen a very nice and strong rebound. We can see obviously that these losses are not there anymore, and that traders are back in green, and there can be even more green candles going forward. And I would not be surprised to at least that we stay in this range, or maybe even start slowly moving towards 100 levels, especially now when we also have this stock market making some very nice rebound. Well, we have also seen some interesting exchange inflows, a lot of inflows into exchanges from private wallets last week, and usually this will occur when you have a downtrend, because there will be some traders that are in loss and they are concerned that market will continue even lower, so they will try to sell their coins for something else. Okay, and usually this means that you are in a stage of a fear, and normally this means that you're closer to potential support. And as you know, the prices obviously rebounded quite nicely. And what's the most important is that the Bitcoin, I also posted this on Twitter, that we have a very key support at 77,000 to 80,000. So we have seen a very nice deep retracement right into this gap from this beginning of November of 2024, when Trump won the US election. So that was the key point for potential resumption to the upside. We said that if this level won't hold, then we have a major top in place. And now since we have a very nice and beautiful bounce, also keep in mind that we recovered away from that lower trend line of this base channel. So whenever I'm looking for fourth wave retracements, okay, I use base channels, and these base channel lines will help you to identify when where wave 4 should possibly complete itself. Okay, and since we haven't seen a break of below that trend line, it means that formation is still valid, especially now when we also rebound quite nicely and make an overlap here with 91,500. Because if someone thinks that that was a major top in place, then obviously you would need to have a 5 waves down, right? Impulsive price action from the highs. But whenever you have an overlapping price action, it means that that's not impulsive move. Okay, it's rather corrective, because impulses are sharp without overlaps. And now when you have these overlaps, it just confirms the idea that most likely we could continue even higher. However, you will have to be very careful in the near term. Keep in mind that there will be now still now when futures market opened, there will be again a lot of hype going on at the start of this week, so there could be a lot of new inflows. Also, this will be visible through the ETFs, but just keep in mind that there can be some setbacks, okay, in the near term. We have now some new gap, because obviously spot market moved to the upside through the weekend. Now this, at some point, even this gap could potentially be filled. So if we see some retracement, watch the levels around 85,000. I think that that's maybe much more appropriate level to look for potential entries rather than chasing up here. Okay, but overall it really depends what kind of a trader you are, how long you are looking to hold your positions. It will be just only for a few sessions, few days or more weeks. Then this will depend how much you want to risk and where you want to look for potential entries. But overall, definitely this appears to be a very interesting support here around 85,000 if we get there. That would be the perfect ideal scenario, you know, for continuation higher later on into wave 5. Now if we take a look here on liquidations heat map, what I really like about this one, that we have a lot of liquidations levels here. Okay, big numbers around 100,000. So definitely this, as you know, has been a very strong, powerful resistance, because we retested a few times. We really didn't break higher, but now when market moved to the downside, there have been some more sellers going on, and those, especially those who are looking who traded this move to the downside with leverage, those have a lot of stops, probably around 100,000. And what I like so far, that we don't have any kind of a real big liquidation numbers below the recent swing low, okay, below the recent lows. So it means that markets can be looking for a push to the upside to clear those stops out rather than moving to the downside. So if we see 100,000 level, maybe that will be very interesting for potential retracement later on, and then next push to the upside. But in the short term, maybe we'll get some more upside here for the next 24 hours. So maybe if we get this wave 5, the ideal scenario will be that we then get a free wave retracement down from 100,000, and then at some point we fill this gap on futures and then continue to the upside. But overall, we certainly are expecting more upside here for cryptocurrencies into wave 5, as long as we are now trading above that level. If 77,000 or 78,000 level is taken out, then I think that we are in a very, very big trouble, especially if we consider that we have a pretty strong recovery so far. Now, regarding Ethereum has also seen some recovery, but it's still like it's been here in the past. It really it's nothing compared to Bitcoin. But when looking at the price action, even if I have the most bearish price action at the moment, when looking at the price data from December highs, even if that's an ongoing impulse, I still think that this wave 4 can rally and maybe can retest 2,800 level. Okay, that will be the key resistance area or do-die area for the upcoming moves on the Ethereum. But overall, okay, what I think it's happening here, that we are just consolidating here still in a higher degree wave 4. Now the only question is how deep or more complex can be this sub wave C of this potential triangle that I'm tracking. The key level, as I said, should be here around 2,800 to 2,900. But if we see a recovery beyond this trendline resistance at some point make even an overlap with this wave 1, then we will know that this leg is fully completed, and in such case I think that we will have even more stronger confirmation and evidence that Ethereum is also looking to move to the upside and resume the uptrend, but possibly after waves D and E. But then of course I will be looking for a completed wave C down here if we get this overlap. That's why whenever you see some notes on my charts here, obviously they make sense, right? So if we see this invalidation, the short-term level broken at 3,100 or so, it means that we move higher into this wave D and that this whole triangle can complete sooner than we think. But overall, I just think that we are here just posing around, and that it's not necessary that this market will continue straight to new highs. It's completely different story compared to Bitcoin. But at least this we have seen some rebound and stabilization here around this very important level around 2000. Now let's take a look here on Ripple. As you know, last time we discussed about Ripple as well, we said that key levels here should hold around $2 or so, and we have seen a pretty strong rebound, but actually that's still some kind of a range. Okay, it's not really a confirmation that we are already progressing to the upside, especially if we go to the smaller time frame and try to analyze this as a triangle. Obviously it means that there can be some more moves to the right, but at some point I think that new highs will be seen here, and whenever we reach new highs, keep in mind that this will be the final leg of this advance from July of 2024 lows. So if you are holding Ripple or if you're looking to get out, well, definitely that will be the very interesting, important zone maybe to consider to put something off the table. Okay, regarding downside levels, if suddenly this previous 2021 support level is broken, then obviously keep an eye on $1.5. That's the 38.2% of this extended leg here, right? Now let's take a look also on crypto total market cap here. Also very overlapping price action. Obviously I'm just waiting to see if we can get a very small impulse beyond this upper trend line of this corrective channel. This would make then pattern even more bullish and beautiful from an Elliott wave perspective. But what is the most important, obviously, as I have been repeating already in the past, to keep an eye on the stock market. Okay, so everyone knows just thinks that, well, because Trump said this, that cryptos will move to the upside. Yes, they will if the if stock market will also continue in this direction. But if suddenly if stock market will move to the downside, all of the gains can be erased very quickly on the cryptocurrencies, because there won't be institutions that will put their money into risk and hold cryptocurrencies while you have a very strong sell-off on stocks, which obviously are much more volatile. So that doesn't make sense. That's why you have to track all and make all of the intermarket analysis, maybe to help you identify what is really going on. For example, today, if we will have still this bounce on cryptocurrencies, but stocks would be much lower, trading around the lows or below the Friday lows, and we wouldn't see this kind of a bounce like we have seen this Friday on stocks, then obviously I would be much more skeptical regarding the whole picture here. So now when we have this also rebound on the stock market, as you know, last time, and not only last time but a few weeks back, I repeated that what's probably the most important whenever we are trapped in this consolidation is to trying to identify the potential supports. To identify the supports, you have to keep an eye on the cash market gaps. Okay, this has recently played out a very important role, and you can see that we basically filled this one. Okay, that goes back from back to mid of January. We pulled back right into this gap area, and now we are rebounding pretty nicely. And this hasn't been the only example. We can see that it was also the case here when market came to the downside. It filled this gap to November levels when Trump won the US elections, and then moved to the upside. So now when we rebounded and filled this gap, I think that we have some very interesting confirmation that at least in the short term we could continue higher. Also, as I said, because we had this positive close on Friday, it looks like that these bulls could really take us higher. Not necessarily to straight to a new high from here, but at least we could break above 6,000, I think. Also, when you look at NASDAQ, notice that we have spiked here below that low and rebounded. It looks like that this can be a very beautiful flat formation. So what is a flat formation? It's a 3-3-5 pattern. So when you have a 3 waves down for a wave A, then you have a 3 wave rally for a wave B, just temporary movement. Usually, ideally, we'll see just a temporary movement to a new high, just to clear out some stops, and their market will make a very sharp sell-off when there will be a lot of fear involved, like has happened in this case, and then you see just a temporary movement to a new high. So you can see that market has barely touched the highs and lows. So there were a lot of liquidations on both sides, and now the market will much easier to find its real direction, which in my opinion can be to the upside. So if I want to identify the invalidation level, obviously at least in the short term, I think that as long as we are above that level, I think that it makes sense actually to anticipate further strength in the next 24 hours, maybe in the next few days. Now, when it comes to the SP 500 here, looking at my primary wave count, it's going to be a triangle, because as I said, gap on the cash market has been filled. Okay, so on futures this comes in around 580.82. Okay, so this has been filled, and because we have a very nice and strong rebound, I think the triangle makes sense. Now, even if it's triangle, it doesn't mean that we are already finishing this pattern. The triangles are structured by 5 legs, A, B, C, D, and E, and looks like that wave D is now in progress. And of course, then it means that there will be more time needed before we complete the whole correction. But what is important maybe in the short term or for this week is that even if you are in a wave D, you should see at least 3 legs to the upside. So I would be expecting market that will pull back a little bit, and then you see push to the upside, ideally into this 61.8%, which is from this wave B, measured from end of a wave C. Okay, it's not the 61.8% of this whole wave C drop, because you have to use the FIPS a little bit differently when you're analyzing and tracking the triangle. So that's the very interesting area, which I think could be reached, especially if we see some pullbacks. If I'm wrong and suddenly we start breaking below 5,848, it doesn't mean that we will be bearish. It means that just more complex wave 4 will take place, and then in such case watch this level around 5784 when which was basically a swing low from November when Trump won the US election. So this definitely, on any unexpected new dips on second scenario, will be the second very important support. So generally speaking, I think that we are still in this corrective phase, that in the short term we could rally further, this relief rally could resume, but overall I think that this correction at some point will take us higher to new highs, hopefully even before summer. Now also maybe it's not a bad idea to look at seasonality chart of the S&P 500. If you look closely here, what has happened here in February, as you know, at the start of February, usually market makes a very nice move to the upside, then it pulls back. Basically, this is exactly what we have, exactly what happened here this year. And you can see that even the first 2 weeks of March could be a bit of consolidation, not really a progression to the upside. So maybe this makes perfect case for this wave E to still unfold within this whole triangle. Someone is asking for DAX. Yes, I will take a look on DAX right now. Pound yen, gold. Okay, we will see how much time there will be left at the end. Okay, so DAX. Well, as you know, we have been tracking this pullback on DAX to be a corrective. I firstly thought that we will see a 22,000 level, but then this one has unfolded as a triangle, okay, within uptrend. So it looks like that we have a pretty nice strong push to the upside right now into wave 5 of 3, and just another confirmation how strong DAX really is, and that we definitely should stick with an uptrend. We'll see how all this story regarding Ukraine will really unfold, but for now, what we see based on the poor price action, really there is no reason to fight this trend and expect any kind of a major top. What we will expect in the next few weeks would be just another consolidation within much bigger uptrend. So when it comes to potential levels on dips, still I think that 22,000 is the major very strong support. Some resistance based on the FIP levels that I'm observing could be around 2370 to 24,000 up there. Okay, but chasing the markets here, it's a bit difficult unless you are looking for some intraday opportunities. Then maybe you should keep an eye on a fourth wave retracement on a much smaller time frame. Otherwise, I just suggest to stay aside here. Now let's take a look also on some of single stocks that have that are more linked to cryptocurrencies because of what's going on the crypto field. So what's happening here, as you know, we have been identifying this as a wave 4. We can see that in pre-markets the price already is trading higher, and if we'll try to now to analyze this whole wave 4, well, maybe this has been some very nice triangle here in wave B of this wave 4. Okay, I will make this black. Okay, so now it looks like that we could continue higher. The real confirmation obviously would be this level around here. If that was end of a wave B, then definitely that's the potential breakout point. But overall, just think that this, so far for now, it looks like a very nice, beautiful correction within ongoing strength. It's not really looking impulsive from the highs that will convince us that top is in place. Now let's take a look also on nvidia to see where the price is currently trading. Pre-market slightly lower, but still looking at this whole price action, it looks like that we have some very nice ongoing triangle, could be in very late stages. So if the risk on is really back, if cryptocurrencies are really formed this low, I think that all of this could possibly drive the prices even higher. So I would not be surprised nvidia to start moving towards from this lower side of the range to the upper side of the range. Even if we retest suddenly 112 levels or even lower, I still would be looking for a next major push to the upside. Also, regarding our second wave count that we also been observing recently, it's also still valid as long as we are above that level, still for a final push to the upside here. That makes sense. Now let me check. Oh, let me check also Tesla, because I know that I had a lot of requests recently for Tesla, especially after this this drop. So what's going on Tesla? Well, because we had some very strong sell-off, I just think that we have to consider that we are stepping into a new corrective phase. Obviously, I can be wrong here, admit, but with the whole price action that I'm seeing right now, it doesn't look good for bulls. Even if we rebound here, fine, I will adjust my views, but what I see so far, it makes me think that we could stay stuck in this range for a while. But it doesn't mean that this is end of a wave 5 here. I also prepared, well, I clicked here. I also prepared another wave count here. Where it is. Here, which actually shows that if we will really stay in this range because of this sell-off, maybe this wave 4 will keep us in this range for a while, and still it can be part of an uptrend. But of course, I would prefer to wait on this whole correction or post to unfold. We need more price data to maybe to identify some key levels for potential completion of this pattern. But what I would observe is obviously not only the distance of a retracement, because we still have seen a sell-off for around 20%, but you can see that each time when we have seen 40-50% of retracement or even more, that's when much better opportunities have occurred on Tesla. So I just think that based on time and percentages of these pullbacks, there is certainly more room and time left till this correction is fully completed. So regarding Tesla, I would just stay aside for now. Now, let's take a look on some of the currencies, and also I can see some requests for gold. I will definitely check this out as well. So, regarding 10-year US notes. Recently, we have seen a pretty nice strong rebound on US Treasury because there was a run to safety. US yields moved to the downside. At the same time with stocks because of some recession fears, because we had some bad economic data from the US reported like a week back or so. So back then we have seen lower US yields and lower stocks, and that's why US dollar somehow has been moving sideways. But what's happening right now? Well, we have US treasuries still in this recovery mode. Okay, from an Elliott wave perspective, you need 5 waves up. So even if after this pause, we should make further highs for a wave 5. And this means that the US yields should move even lower. And this makes very nice bearish case for the US dollar, especially if we consider that stocks are now trying to stabilize. And you can see that this effect already since Friday. We have seen some very nice rebound here on the SP 500. US treasuries and US yields were basically sideways here, but the dollar is already coming off. So I think that there is actually a chance that if stocks will hold this support, that the dollar could really make much deeper pullback. But I know that there is a big risk for this week. There are tariffs for Canada, Mexico, and China that could be announced, what I heard recently, within 24 hours or so. If that would be the case, well, then you know that maybe dollar will still see some push to the upside, because this has recently been the case. But we know that this is now being an old news. It's nothing new. So despite some potential push to the upside on the US dollar, there can be some resistance not that far away. And what I'm looking at the US dollar, maybe firstly the bigger picture here. By the way, guys, please make sure to press this like or if you're watching this on YouTube, Twitter, whatever you are watching, please press a like, leave us some comment below these videos as well, so that we will be listed higher by algorithms. Okay, regarding dollar index, the big picture, still we had this ABC rise, and we are testing very important levels here around 106. But I think that this level, if really will be broken, we have important top in place, maybe even with an leading diagonal from the highs, if that would be a level broken, or possibly with even aggressive 1-2 bearish scenario. That would be the best potential outcome, especially if stocks will be able to hold the gains, if the US yields will come to the downside. And when looking here at this price chart, obviously it can be the case that we will see a strong break to the downside into wave 3. As I said, the most important is that stocks will be able to hold these recent lows from Friday. That's the key level. But in the short term, if we see some rally here, what's the key resistance level for the US dollar? Would be around 107.50. Also, this level is suddenly broken. I'm wrong, as I showed you already this wave count last week. I said that we are at some decision point, and that's why we also prepared this as an alternate scenario, where maybe this wave C has ended with an ending diagonal, and we will see a push to another push to the upside and retest of 111. But that doesn't mean that I will be very bullish on the US dollar. Then I would adjust the fuse and most likely look still for some resistance on the dollar, but it will take much longer for this dollar top formation to really play out. But when I do a combination with what we see on stocks, on US yields, and other markets at the moment, I just think that stocks have had a pretty nice long pause since December, and if there will be really some continuation to the upside in upcoming months, I just think that dollar obviously will sell off from any kind of resistance retested here. So as I said, 107.60 is a key level for bears to stay in place for this week. If we see this retest, watch out what will happen up here. Regarding euro, same very similar thing, opposite direction. We are still trapped between these two very important levels, 101.90 and 105.40. But if we start breaking above this resistance from January, and you see daily closes, not only one daily close, maybe two daily closes above that levels, to make even more conviction that we are breaking out of the range, then obviously I think that we could start drifting much higher here. But watch the ECB on Thursday. Now here's cable. Cable is also making some very nice higher highs, higher swing lows. So clearly we are in uptrend, and even if this is a temporary uptrend, we were looking for continuation higher for a wave C, but ideally that will be a wave 3 to the upside. But I think that there will be some very important resistance around 1.28 level. This will be key resistance to watch for potential setbacks in, let's say, maybe already later this week. But overall, I just think in the short term that you should be prepared on slightly more upside here in the future. But whenever looking at the bigger picture, I just think that we are either completing this wave B for a flat, or maybe still in a triangle. But I think that sooner or later cable will be trading much higher through this year. Now let's take a look on dollar CAD. Because of tariffs, as you know, CAD has seen a pretty strong hit. Also we have seen lower crude oil prices as well. So Luni is in a downfall, but looking at this price action here, even if it's an impulse, it's not really completed yet. So I think that there can be some more upside in retest of higher resistance. So if US dollar would suddenly come back to the upside across the board, if Trump would really deliver and confirm these tariffs, then watch out for dollar CAD to move up to this area here around 1.45. Now supports that I would observe would be around 1.4380, which is the previous swing high here from February. And then I would also pay attention, let me mark this, to these levels here, because if you zoom this in, you can see that possibly that was a minor fourth wave within this extended wave 3. So definitely these are the swing supports that matters. Regarding bearish case, 142.46, if this one is overlapped, then I think that CAD will recover going forward. Now let's take a look on dollar yen, still in this downtrend channel, and even if it's corrective because of potential 7 swings, it's incomplete structure. So watch out for potential resistance zone this week around 151. Just actually it has just been retested today. Above that you have 152, which is the upper channel line. So from that area I would be looking for a sell-off here and to retest these levels here. We will see what will be the main driver of this weakness. Could be lower US yields, could be bearish US dollar, could be hawkish Bank of Japan, who knows. But overall I just think that before this market could possibly stabilize, that we have some lower prices to be retested first. Now dollar Mexican peso, also I'm quite surprised, but still I like the idea that it's Mexican peso is holding quite well in this range despite these tariffs. We have seen some pretty strong, as you know, spike to the upside here, and then when tariffs were delayed, we have seen that market came back into this range. So basically we are trading out of this potential wedge formation, and I think that there is a chance that we will see more weakness. So even if we will see some retest of higher resistance here around 20.70, I still think that this could be quite interesting levels that could be maybe faded, especially if there will be nothing new from regarding these tariffs, but just confirmed what they have planned before. Now here we also are looking at dollar versus Chinese yuan. Now again, if this one will come to the upside, I have been talking about this one already in the past. It really didn't move much. It was mostly consolidating. So I'm just wondering if still Chinese yuan in general can see more weakness due to tariffs. If that would really be the case, I'm wondering what this means for gold. Well, it means that gold could consolidate a bit further, right? Keep in mind that gold has broken out of this upward channel. Looks like that it's stepping into a correction, and we have been discussing about this correction last week, if not 2 weeks back, when we identified this potential ending diagonal here that formed a top for a wave 5 of an extended wave 3. Looks like now we are in period of consolidation. Now the question is, what level should we watch? Well, if we consider that was wave 2, it was actually, as you can see, irregular formation, because we have seen a new high here for sub wave B and then a retracement. So if that was a flat, then what we can expect in a wave 4 due to rule of alternation is that wave 4 could then be a deeper pullback rather than sideways. So if that was a flat for a wave 2, then wave 4 could possibly make a different type of a corrective price action, could be a zigzag. So I'm wondering if we can see a slightly more weakness here, and there is more time left for these prices to pull back. Also, you can take the distance of this wave 2 range, okay, and you can measure it and compare it from the high of this extended wave 3, and you will come out with the levels around 2815. And keep in mind that this is exactly here at the 38.2%, which is the perfect fib level for fourth wave retracement against the previous extended wave 3. Not only that, that's also the previous old high here. So this whole zone, okay, could be very, very attractive. So in the short term, after summer relief rally, I would not really be in the camp for potential longs here. I just still think that much more appropriate, better entries could be a little bit lower. But even if I will be wrong, market moves straight to the upside, okay, I will identify potential new opportunities later, but with this price action, I'm just not interested to look on gold just yet here. Okay. Okay. Someone asked for Dodge. Basically, I will not look for Dodge because simply we have to keep some analysis private, unfortunately, because we have also, as you know, a lot of analysis shared in our members section. So if you're interested in more analysis coverage like this on a daily basis, where we update all of those wave counts on intraday on a smaller time frames as well, make sure to check our services at wavetraders.com. If not, just be with us again next Monday, or follow us on our social media on Twitter as well, where I will share some analysis through this week. Traders, again, thank you for being with us and good luck this week. Bye.